Mr. Jaisinghani, coming to you first. You had guided for an overall revenue growth of 20% for this entire year, with margins between 11 to 13 odd percent. So the first question that begets asking is that after the first half of this year, you have tailwinds for this third quarter because of the festive season, etc. What's the kind of revenue outlook that you have for this year, and both the segments in particular?
No, market is going very great, and we feel that market is going to grow, and demand is there today because all building construction division, all industries, all infra of the government, everything is demanding us good. I don't feel anything there should be any degrowth, but growth will be continuously. We are looking at a great year in this year.
Could you specify how great can it be, Mr. Jaisinghani? First, for the last quarter, I see you have given revenue growth, but copper prices are lower. So the number I'm looking at is what was the volume growth for the past quarter? And at the half-year mark, you've already done 25% of revenue growth. So that 20% looks pretty much achievable, right? Do you want to upscale that revenue guidance that you gave earlier?
Yeah, maybe because of second half year always is more than the first half year in our line. Is basically first half is going to be 45%, second half is going to be 55%. So it is going to grow more than first half.
So more than 20% growth can you do for the year? And I'm again requesting you to give us the volume growth number for the cables and wires business for the past quarter. Was it in the vicinity of 20, 22, or 25%? What was it?
That Mr. Gandharv can give the reply. Gandharv, you will get that.
Sure. So directionally, what we are trying to do is make structural changes in the way we conduct the business. When we spoke last quarter, I was talking about the project lead, where we are working with, along with BCG team. The objective is to get to 20,000 crore rupees of top line by fiscal 26 with better profitability, better working capital. And these are the few initiatives which are now getting reflected in the profitability as well as in the top line. And rightly picked up, the quarterly revenue has registered a growth of almost 22-23%, and most of it has come from cable and wire business. In the domestic market, we have additionally added geographies. We would have added almost 120 districts, which has contributed additionally.
Mrs. Tongia, sorry to come in here. I just think I missed that volume growth number. For the past quarter, what was it in the cables and wires business?
So almost all the growth which we are seeing in the top line is broadly because of volume. There is a fair amount of price correction. The copper LME has gone down.
Yes.
And whatever top line you are seeing is broadly because of volume. So the another thing which I want to highlight to you is the exports business, which has registered a fair amount of growth, and that is also contributing to top line of the company.
So does that mean that your realizations were flat and the entire volume growth, the entire revenue growth of 12% is volume, or the realizations were lower than first quarter as well, Mr. Tongia?
So in our business, the top line in a way is influenced by the movement in copper LME and aluminum LME. In the month of March, copper LME was around $10,000, and slowly and gradually it has now started moving towards $7,500. And we pass on all these changes to our end customer, and to that extent, the top line is not comparable because
which is what we're trying to understand. Of the 12% revenue growth that you have reported, how much of that is volume growth? Assuming that by the number that you said, say maybe a 10-20% reduction in price is what we've seen. So does that mean that 22% growth is the volume growth?
It would vary from product category to product category, but generally it would be in teens across all the product categories.
High teens? High teens would it be?
Mid to high teens in the domestic market.
Okay.
And the another important thing is exports. Exports used to be around 6-7% of our top line.
Yes.
Now it is almost, if I just pick up the first half as a base, it's almost like 10%. Second quarter would be around 12-13%. And that is also contributing to top line augmentation.
That we understand because you had guided for, the exports to increase to double digit in terms of contribution much later, but that has happened much sooner. We'll talk about that in just a bit. Input costs have also come down. What is your guidance as far as margins are concerned for the remainder of this year? I mean, you would do 12 to 13%. You reduced that to around 11 to 12%. Now, do you think there is a chance that you may go ahead and cross that 12 to 13% band in the second half?
So we have predominantly two businesses. The core business is cable and wire, which contributes 85% to our top line. there generally we have maintained EBITDA margin of 11 to 13%, and even this quarter was not an exception. Between first quarter to second quarter, there is some improvement in EBITDA margin, but broadly it is within the range of 11 to 13. We believe that in the years as well as quarters to come, we will be able to maintain the EBITDA margin of 11 to 13%. That was on the core business side. The new age consumer business, which contributes around 10-12% to our top line, there our margins is low single digit, and we believe sequentially, gradually by FY26, we should be able to get to 10% EBITDA margin in that business.
All right, Ms. Tongia, we are running a little short on time. Wanted to ask you, you're talking about this 20,000 crores of revenues. Currently, you're going to run rate of say 13,000 crores odd. What is the incremental capex you need to incur, or does your current gross block support that kind of a number as well? Or will you be looking at further inorganic growth since you're sitting on some cash? Very quickly.
Yes. So we would be looking for both the options. As far as capex is concerned, we will incur around 400 crore rupees of capex every year. On the M&A opportunity, we are sitting on almost 1,600 crore rupees of net cash. We acquired a company last year on the IoT space, and we are looking for similar opportunities in the currently, and we would be keen to acquire companies.
All right, and quickly before we let you go, 20,000 crore rupees in terms of long-term revenue projection. How much of that is cables, wires, and how much of that is FMEG? Because you are looking to increase your contribution coming in from FMEG.
So today our B2B, B2C split is 60-40. 60% is B2B, 40% is B2C. We expect this would be like 50% B2B and 50% B2C by fiscal 26.